China itself is obviously pursuing a policy of financial markets liberalization. And I think Hong Kong being I'll start with Hong Kong and I'll come to Singapore. And because what we have witnessed in Hong Kong in the last 4 or 5 years has been the opening of the Chinese capital markets and Hong Kong being positioned as a gateway for international investors into China and for domestic investors to get out of China. And for us, especially in the ETF business, in the mutual fund business, we have capitalized on multiple opportunities with regards to mutual recognition schemes, cross-listing schemes between the two jurisdictions, to have our funds offshore to be listed via a partner into the Chinese capital markets. And likewise for our partners onshore to come out to Hong Kong to access international investors. The results were very interesting, and if I may say, one-sided, because the capital flows that we've seen when a fund goes back to China for listing is phenomenal. So literally, we are talking about money being raised on day one, day two, at very phenomenal speed, just because of the size of the market, simply because of the size of the retail market. Whereas listing opportunities from China out to the international community, I think it's still on a nascent stage.
Trickle could be a good word.
I wouldn't use the word trickle. It's substantial. I mean, in the offshore context, but clearly that clearly positions China itself as a big opportunity for everyone wanting to get in there. But nonetheless, the opening of China, it's progressing in a controlled manner, as you can tell. We started off with QFII programs, RQFII programs, to eventually access Stock Connect programs between Hong Kong and China. It's progressive, controlled, and with each stage, and now the GBA Wealth Connect, it's often very structured, and it presents itself an amazing opportunities. Now, and we have capitalized on that in Hong Kong as an offshore entity of our Chinese parent, and because of our Chinese parents onshore, we have leverage on their network to obviously avail ourselves of the opportunities in the Chinese capital markets. Now, coming to Singapore, I'm not sure if everyone is aware. I think between the exchanges, the Singapore Exchange and the Shenzhen Stock Exchange, we entered an MOU to talk about the potential cross-listing of ETFs between the two exchanges, and I think there's already one in place that's done by a local asset manager that's probably cross-listing back into China and having an onshore Chinese asset manager that is listing its product into Singapore. So I think in the very same vein, there is a very exciting opportunity because I'm well aware of multiple asset managers looking to tap on that opening of access between the two capital markets.